This is Market Day Report. We're glad you're with us. Another trading day. It seems almost kind of like a holiday. Well, it is a holiday, but it is a holiday that we continue to trade through. Even though it is Veterans Day, the markets are open all day long. So let's start with the corn market. And last time we checked on corn, every contract with the exception of the March was in unchanged territory. We're slightly changed now, up a penny 3/4 on December at 431.5. Now notice that's a market in a 3.5 cent trade range. Seeing a 3-cent range in the March contract. Roll out to the July, and you're seeing, what is that, a 2.5 cent trade range in July? Yeah, pretty quiet right now in the corn market. How about soybeans? Yep, soybeans down 2.5. That on the November. But let's skip down to January, as that November is set to expire soon. 11.27 3/4. It's down 2.25 cents. Wheat market, Chicago. Let's do new crop here. July, 1 tick higher at 569. And hard red, July, 561.5, down 1 3/4. Spring wheat moving mostly higher for the third straight session. And then the cotton market here down 7 at 64.24. Now, Chris Swift's with Swift Trading here in the studio with us. And Chris, you mentioned it as you came in today. It seems kind of strange, not a whole lot of traffic as you drove in.
It does, and you know, I thought about that, and then I looked at our energy prices this morning, higher sharply in the diesel fuel and gasoline, and it's interesting, they have been that way. So once I thought maybe we're getting into a little bit of a recession, maybe we're slowing down just a little bit, but all in all, what it looks like really is we probably just got a tad bit of inflation, and what seems to be triggering it more than anything is overseas. So more of the Russian refineries have been hit. When that takes place, what we notice is crude oil kind of sits there. It doesn't do a whole lot in our products, gasoline and especially diesel fuel, because that's what it takes to run all the tanks and armaments, is that. And so that's what we're seeing now is the spreads between diesel fuel and gasoline widening, with diesel fuel leading the way, and even more so between the products and the crude oil. And it's kind of interesting because crude oil looks almost like it's in a bear market, but yet we set almost new contract highs today in the diesel fuel.
And I use that as a way to segue back over into bean oil, and we're watching that rally start up again. You know, we rallied through the summer in bean oil, and then started pulling back for the last couple of months. But now it looks like there's some renewed interest here. Any thoughts here on just biofuels in general?
Well, that's probably what it's going to take to get us out of some of this glut that we got, and specifically in corn. So we need probably to either go to an E15 or find some way to really go through a lot of corn, because we're going to have a big carryout. 4 or 5 billion bushel carryout at the end of 26. So it's going to be interesting to see how we do it. And yes, I think that the bean oil, beans, corn, all of them right now trying to climb a wall of worry, because there's nothing really recessionary just yet. Most everything is still inflationary. Stimulation from the government, wanting to hand out more checks, opening the government back up again. Everybody's going to get a paycheck now. So I think you'll see a little spurt of inflation going into the end of this year, more so than maybe depression.
So we've got Chris Swift in the studio with us. Hang on, we'll take a break. Be back with more markets on Market Day Report. We went limit higher yesterday in, well, a few contracts in live cattle and all of our feeder cattle. What about today? Live cattle futures are in the red. We're down 90 on the D's at 227.65, and that February at 226.47, it's off 52. Feeders, this is the one that went limit higher yesterday, but we're not really limit higher now, which is probably good, but we are seeing gains of anywhere from $2.62 to nearly $4, that coming on that November contract. Got Chris Swift with us, Swift Trading. All right, thoughts here?
It's all about the basis. So the basis in fat cattle is relatively tight. It's still about $20 wide in the feeder cattle market to the back months. So you had an enormous divergence of basis when you had the big sell-off close to $50 to $60 per contract month. Now we're going to spend weeks on end trying to converge those bases back. And because we've got some differentials in our fundamentals now, it's probably going to be very choppy, sideways with maybe a little bit of an upward slant to it.
All right. If we do bring in more beef from Argentina, is that necessarily a negative to the market?
It depends on how you look at it. To the guys that it is going to help support their business, absolutely is the most crucial thing that we could get in. To those that it might hamper some of their business, they don't want to lose the cornering of the market because they really did. They had a stranglehold on it. If you don't bring in any more product, we're kings. We have the only product available if that's what you want. So a little bit of both is what it's going to do, but it should give everybody some opportunity to say, we have been trading so abnormally for the last 2 years, and over the last 12 months, the most abnormal that we've ever traded in history with 2 major events. We closed the border and we raised tariffs to it. So what's the most likely thing to do? Let's go back and find some normalcy in the market. And I think that's what we're going to do, and it's going to take weeks to settle that out.
And what about those who've had to be making some of these margin calls?
Well, it's good for the goose, is good for the gander. We've met margin calls all the way up, and some people will meet margin calls all the way down, and it's a factor of the market. But in all reality, everybody's had the opportunity. We've had some really bad days limit. The problem going forward now is if we don't sustain the bull market, even if prices stay relatively level where they are right now, we paid a much higher price for them in the past, so we've got to work through that and get some lower prices in first and then hopefully get a move up.
Good points. Love having him in here. It's Chris Swift with Swift Trading.
All right, thank you so much, gentlemen. We appreciate it.